Welcome to the monthly market report for March of 2022. My name is Kate Rezebeck, and I'm thrilled to be here today to talk about three of the most important topics in the housing market. We're going to go over home prices and answer the question, are home prices accelerating? We're going to talk about supply and demand and how that is impacting home price appreciation today. And then we're going to wrap on net worth as we talk about some of the long term financial benefits of owning a home. Now, I mentioned a moment ago that this is March of 2022, and truly it's hard to believe that it was 2 years ago to the date that a worldwide pandemic really came upon us, swept through the nation, and fundamentally changed a lot of what we do. And housing certainly wasn't immune to that. A lot of things have changed in the housing market, and I think one of the biggest things that we've seen is the change in home price appreciation. So, that's where I want to start today and really reflect on what's happened over the past couple of years. In 2020, CoreLogic said that we had 6% home price appreciation throughout the year. And that's pretty significant if you think about prior to the pandemic, a more normal year of home price appreciation was about 3.8%. So 6% is really significant. And then, we all saw that continue and unfold in 2021 as we saw home price appreciation that was more than double that. So, really significant home price appreciation over the past 2 years. And that is largely due to supply and demand, more buyers in the market than we've had homes available. So, I want to walk through this and what it means going forward as we look at the home price forecast as well. And I think one of the best places to start is with a deep dive into home price appreciation last year. So, the answer to the question, are home prices still accelerating, is yes. And we can look at this graph and see percent year over year price increases by month going all the way back to 2021, to January of 2021. So, if we look over on the left side, in January of 21, we saw 10% home price appreciation. So, year over year, from January of 2020 to January of 2021, home prices increased by 10%. And then, as you can see, month over month, it really started to accelerate through the year. Now, when we hit the summer, if you see July, August, and so forth, it started to level out at about 18%. Very significant home price appreciation. But that's when we started having the conversation and we started hearing experts saying, are home prices going to decelerate, meaning continue to increase, but just at a slower pace? And the reality of it is, we saw that kind of 18% hold steady for a while. And then into December and January of 2022, which we can see as the latest data we have, that green bar is showing that home prices are starting to tick back up. And that's again a direct result of high buyer demand and low supply. So buyers are really competing for homes, and that's causing home prices to tick up. Now, if we look at this on a state by state basis, this is a really interesting map. It shows changes in prices in the last year from FHFA. And this is really interesting because what we can see is that FHFA shows that the national average was 17.5% home price appreciation last year. Now, some states were higher, some states were lower. You can see that across the board. But the reality of it is, we didn't have depreciation in any state. Home prices were rising throughout the country. Again, a direct result of supply and demand. So, where we can break this down even further, really interesting if we look at the past 5 years. National average over the last 5 years was 54.5% home price appreciation. So, as inventory is low and buyer demand is high, this is what we are starting to see year after year, is increasing home price appreciation. And that really exploded in 2021. But if you look back at the last 5 years, home price appreciation has been incredibly significant. Now, where this gets even more interesting is if we look at the past 30 years. So, changes in prices since 1991. If you go all the way back 30 years, national average is 258% home price appreciation. That is massive. So, this becomes a really important conversation as you have clients who are saying, Is now a good time to buy? Should I buy a home? Am I buying at the top of the market? Is my home investment going to be a valuable one? And if we can go back 30 years and we can look at over time, I would ask the question, if you could go back and buy a house in 1991, would you do it? I think looking at this data, the answer is clear. Home prices have definitely appreciated in value and been historically a very strong investment. And the question becomes, as people are trying to decide, but what's the next move going forward? What's going to happen throughout the rest of this year? We have to look at home price forecasts for 2022. And this is a chart that we like to show a lot because it averages out what the experts are saying. And we follow 7 key entities who forecast out home prices through the rest of the year. And when you average those together in the green bar, you can see they are projecting roughly 6.1 home price 6.1% appreciation through the rest of this year. So CoreLogic is on the high end with 9.6, Zelman's on the low end right now with 3%. But the reality of it is all of the experts are saying that home values are projected to continue increasing throughout the year. And that, again, a direct result of supply and demand. And the reality of it is we are likely going to see these forecasted in an upward direction going forward as we continue to have low inventory on the market. There's a nod towards more sellers coming to the market this spring and more new construction, and that could all ease some of this home price appreciation as more inventory is available. But what we're seeing is experts are all projecting home prices to rise. So I want to stop here for a moment and talk about supply and demand, because you've heard me mention this several times, that the inventory and the supply and demand balance is really what determines where home prices go. And I think this next graph is a really good foundational element to start that conversation. And this is how the market impacts, or inventory impacts, home prices. So right now we are squarely in what you would call a seller's market. We've all heard this, we've all felt this. And that's what you can see there over in the blue bar. Essentially, it means more buyers in the market than homes available for sale. They're competing for homes, that's driving prices up. That's the general law of supply and demand. Anytime there are more buyers for an item and there are people selling that item, prices will rise because people are willing to pay more for them. Now, a neutral market is where this kind of balances out, and a buyer's market is where there are more homes available than buyers interested in purchasing them. So that causes prices to decline. So we're in a seller's market today. And I think, the question people want to know is, what does this mean from a listing perspective? When we look at the number of listings in the market, we've heard that inventory is historically low, but what does that really look like? So I'm going to show you right now new listings, and they are actually falling dramatically right now. This is a look at 2021 month by month, new listings coming to the market in thousands. And what you can really see over on the right side is October, November, December, listings really started to decline once again. So not as many listings coming to the market towards the end of the year. Now, this is pretty typical for the housing market because we generally see listings softening in the winter and then picking back up. And you can see that, they're definitely followed that trend over the past year. So that brought us really to this historically low inventory. And what I'd like to show here is that active listings are also dropping again. So what we have again, October, November, and December, active listings falling towards the end of the year. And this means that homes are selling just as fast as they're coming to the market. So buyers are in high demand. There aren't enough homes on the market. They're not staying on the market. They're not staying active as listings because they're going into pending and sold so quickly. So, the reality is, anytime we start to see inventory low like this and prices start to rise, when people hear that prices are rising so significantly, and inventory is certainly driving this in today's market, As prices are so high, as they're rising so significantly, they start to wonder about the housing market. And people remember what happened when the housing market crashed. They remember prices skyrocketing and, they worry about a housing bubble. And the data today shows this is a really interesting study from realtor.com, and it shows that worries of a housing bubble still persist. Now, this is the percent of people who say they believe there's a housing bubble where they live. And so, among consumers surveyed, 77% feel like there's a housing bubble in their market. That's 3 out of every 4 people feel like this is a bubble that's about to burst. Now, if you've been following along with us, that we have shown the data month after month after month that we're not headed for a housing bubble. But when we know that this concern is out there, when we know that there's uncertainty in the market, that people have fears, we want to help ease those fears. So I'm going to walk you through some slides in a moment that are going to help you have those conversations. And if you're sitting in the camp of agents over on the other side that says 44% of agents feel like there's a housing bubble as well, that's nearly half of agents. So if you are looking for the information to share on why we're not headed for a housing bubble or to ease your fears, I think the next few slides are really going to help. So what I want to do here is really paint that picture from an inventory perspective, a supply and demand as we're talking about today. And this next slide shows that inventory of homes today is nothing like the last time. So this is month supply of existing homes for sale in December of each year. Now you can see on the left side, the 4 years of the housing crash, and on the right side, the past 4 years. So let me break this down for you. The orange bars over on the left, 2000 through 2010, show that that was a buyer's market. We had an oversupply of homes. So you remember that graph that I just shared with you on seller neutral buyer's market. These bars show that we're in a buyer's market when the housing market crashed. 9.6 months of inventory in 2007, 9.4 in 2008, significantly higher than where we are today. And today you can see is the right side over in the blue bars, 2018 to 2021. So even in 2018, when we had 3.7 months of inventory in the market, that was significantly higher than where we are today at kind of record low, if you'll say. And that was low. 3.7 months of inventory was low going into the pandemic. And then look at 2020 and 2021, simply just not enough homes to go around. So when there aren't enough homes on the market, that's what drives prices up. But it is a significantly different environment than what we had in the housing crash. So when people remember the housing crash, we have to remind them that inventory is in a totally different place today. So yes, prices are rising based on supply and demand, but we are nowhere near where we were the last time. Now, the interesting thing about this as well, I told you I wanted to walk you through buyer demand as well. So take a look at this. We hit a record high, a 15-year record of existing home sales in 2021. So this is the number of existing home sales from 2019, 2020, and 2021. You can see 2019 was 5.3 million sales. We broke that record in 2020 at 5.6 million, and 2021 just crushed that with 6.1 million homes sold in this country. So what does that say? That says buyers are out there, they're looking for homes, they're purchasing homes, and they're actively in the process. So we have high buyer demand, we have low inventory, significantly different fundamental than where the housing market was when the bubble burst. And the truth is that the people who are purchasing these homes can afford them this time. And I say that because I want to share this data here that shows, credit scores are nothing like the last time either. This is the volume of loans in billions with a credit score less than 620. So take a look at those orange bars, 2003 to 2007, significantly more loans issued to buyers who had a credit score less than 620 than we are now, where we are now. So 2008 to 2021, you can see that those lending standards have gotten much tighter, meaning that buyers are essentially showing the credentials that they'll be able to afford their home. And that's what's leading to the loan opportunity. So, very different lending standards are creating a landscape that's nothing like the last time. Credit scores are definitely, tighter this time around. And if you're worried also about any other fundamentals of the market, let's think about equity for a second. Homeowners have significantly more equity today. So they're in a much better financial position as homeowners in this process. And if you're worried or you have clients who are worried about a foreclosure crisis, I encourage you to go back and look at the data from our last monthly market report on the forbearance and foreclosure update that we gave, because the data simply shows that we're not headed for a foreclosure crisis. We won't see a wave of inventory coming to the market that is going to significantly tip the scales into a buyer's market. There just aren't enough homes going into foreclosure. And we're so grateful for that, because that means more and more people are staying in their homes. So the fundamentals of this market are really a lot different. And the reality is, we know that people still have concerns. We want to ease those fears. We want to make sure they understand what the data is saying when it comes to understanding the housing market and having that confidence today. Because as people see prices rising, they start to fear this is just like the last time, and it simply isn't. And I think this is a really important conversation to have with your clients who are potentially still renting right now and thinking about, I could buy a home. I'm thinking about it, but I'm watching prices rise. I'm not sure if I should buy right now. I'm concerned that there's a bubble. But, truth be told, we want to have that conversation around net worth, because net worth is really a game changer. And the data that I'm about to show you really paints a very strong picture for homeowners or potential homeowners when they're thinking about the long-term financial benefits of owning a home. There's the stability, the security, that emotional American dream of home ownership that's so important. But as this quote says, with inventory at an all-time low, buyers are still having a difficult time finding a home. So as they're feeling like, I'm not sure that I want to stay in this game because it's a tough road right now, and prices are rising and I'm having a hard time finding a home. One thing that we really want to share with those people who could be potentially buying right now is the net worth of a homeowner versus a renter. And this is data from last year, from 2021, latest from NAR. It shows that the average net worth of a homeowner today is $300,000. The average net worth of a renter is just $8,000. Think about that for a second. $300,000 versus $8,000. If we're talking about building that financial future and really thinking towards that long-term goal of home ownership, and we look at the data, the history that shows how much homes have appreciated over the last 5 to 30 years even, that differentiator of net worth is really something we want to remind people of, especially for those who are renting and they're thinking, I could buy right now, but I'm going to wait. I'm going to see if prices fall. I'm going to see if mortgage rates drop. We know we're not in an environment where that is projected to happen. So buying now and getting that net worth journey started towards home ownership is such a game changer for the future. And I think another way to look at this is a really powerful one as well. It says the net worth of a typical homeowner is about 40 times the net worth of a renter. 40 times. That is huge. So the numbers don't lie, and they can really help drive some powerful conversations when you have potential buyers who are trying to decide, is this the time for me to buy? Now, we know everyone purchases a home at a different time for a different reason. They're financially, emotionally ready at different moments, and that's okay. But being able to share this data so they can make the most powerful and confident decision is really what's important. So I want to end this section with a quote from the National Association of Realtors. It says, "Well, the booming housing market contributed significantly to the recovery of the US economy, research has consistently shown that home ownership is also associated with multiple economic and social benefits to individual homeowners. Homeownership has always been an important way to build wealth. And I think this data shows this loud and clear that, 40 times greater that net worth, that is game changing. So when we look at the big picture and we say home prices are rising, they are still accelerating. They're projected to continue rising, and that is a direct reflection of supply and demand. We also know that people have concerns about a housing bubble, but when we look at the data, we look at the fundamentals of this market, we're simply not there. And when we think about, the concerns that potential buyers may have as they look at all this data, they look at those rising prices, they feel those rising mortgage rates, they feel all the feels. Getting back to the stability, the security, the American dream of home ownership. And oh, by the way, don't forget the net worth component that really drives your financial future 40 times greater for a homeowner versus a renter. So I hope these visuals, these quotes, these graphs, everything were helpful for you today. Put them on your phone, share them with your sphere. Make sure to get this message out there. Let's go help ease those fears of those who are worried about a housing bubble. The data just simply doesn't support it. And now you have the information and the visuals to have that powerful conversation with your clients.